Hi guys, this is Mark Shawson, the Pattern Trader. In a moment, I'm going to share with you a video showing how I made a ton of money just trading off the weekly charts. So as you guys know, my philosophy is to capitalize on the big, huge moves out there. Over the last couple of months, I've been short the Australian dollar versus US dollar, the New Zealand dollar versus the US dollar, and the US dollar versus the Japanese yen, as all of those pairs crashed. And again, to my mind, there's no way that you're going to find these opportunities or be able to capitalize on the bigger moves if you're looking at short charts. If you're looking at a 5-minute chart, a 15-minute chart, even a 1-hour chart, the markets can go anywhere in a short time frame. By trading off the weekly charts, I'm able to see the forest for the trees. I'm able to see the big picture. That's why knowing a pattern that occurred 4 years ago in the dollar versus Japanese yen alerted me to an opportunity to get short dollar yen at 112, and it's currently trading at about 108, 400 pips below where I entered the trade. And again, it was by focusing on the long-term patterns that tipped me off to that move and enabled me to stay in that move. And that again is really important. So there's no way you're going to be able to stay in a week-long, month-long, 3-month-long trend if you're looking at short-term charts. There's just no way you won't be duped out by the emotions of the day. Again, to my mind, trading off the weekly charts is the way to go, especially considering we're now going into the seasonal June through August time frame. Typically, this is a time frame where the markets become extremely range bound. And if you're focusing on short-term charts, you're just likely going to be caught up in the chop. By standing back, by looking at the long-term opportunities, you'll be able to assess the risk-reward trades that really are going to pay off over the long term, and it will help you avoid getting caught up in the markets. So with that said, I really hope you get a ton of value out of this video and hope to hear from all of you soon.
Hi guys, this is Mark Shawson, the Pattern Trader. In this video, I'm going to discuss how I made a bundle just trading off the weekly charts, and how by trading off the weekly charts, you can save yourself a lot of time, a lot of stress, and consistently make money over the long run. In this particular email I sent out on March 31st, I was looking to go short the New Zealand dollar versus the US dollar. You can see that this is a weekly chart where each one of these price bars equals 1 week trading time frame. And you can see in this particular email, I suggested that put a sell stop at 67.67 with a stop loss at 69.01 and a take profit of 65.57. In a moment, I will share more about my analysis, but let's just see how this trade worked out. Here is an extract from my trading account in which I went short the New Zealand dollar versus the US dollar at a price of 68.57 and got out of the trade 300 pips below my entry and made $56,800. Now this was including the swap fees of $6,768 and the commissions. This is a blow up of the chart that I was looking at before I recommended going short the New Zealand dollar versus the US dollar at a price of 67.67. Let me walk you through the process before I recommended that trade. You can see that the New Zealand dollar for the last several years has been going lower from a price of 8,800 in 2015 to the then price around 68. So undoubtedly was in a solid downtrend. Now the phase of the market was lower, and then within the phase of the market I also recognized this interim double top where you see these two twin peaks at or near the 74-75 price level, and then all of these sub peaks that make up what I call a complex head and shoulders bear price pattern, which indicated to me that prices were going to continue lower out of this double top head and shoulders. Now in this time frame, you can see that we formed an ascending triangle where I took you through and showed you how the prices were supporting along this uptrend line and then resisting on that horizontal line, forming an ascending triangle. I speculated at the time on March 31st that if we bust through this ascending triangle, that prices would shoot a lot lower. This is a current real-time chart of the New Zealand dollar versus the US dollar, again on a weekly time frame. And this was the ascending triangle that I was looking at in late March, where I recommended getting short at a price of 67.67 right as this price broke through. And then I got out of the trade right as prices showed support at a price of 65.57, making 300 pips and over $56,000 in a trading account on the short side of the New Zealand dollar versus US dollar on that March 31st email. This is a copy of an email that I sent to thousands of our Pattern Trader members around the world on April 28, 2019. In this particular email, I entitled it Euro-Yen Crash, as I anticipated that we were going to get a huge decimation of prices in the Euro-Yen. And again, this was the examination on the chart on April 28th, and this was my analysis. I said Euro-Yen has formed a double top and a secondary double top. A crash below the neckline will likely precipitate a large move lower. And you can see that this was the double top. I'll do an extract of the live chart in just a moment. And here is the neckline that I was referring to. In that the week prior had a large downtrend, I anticipated that prices would reverse back into the trend before going lower, and suggested selling short on a limit at 124.57. That's exactly what happened. Prices went higher. The sell limit at 124.57 was triggered. This is an extract of the short Euro-Yen trade that took place on April 29th in my trading account at a price of 124.57. I got out of this trade at 122.81 and made a total profit of almost $50,000, including the swap fees of $1,121. This is a live chart of the Euro versus Japanese Yen on a weekly chart. As you can see, the price of the Euro versus the Japanese Yen has been going down over time. It is a downtrending market. Within the downtrending market, in my email, I showed our members how the Euro-Yen had formed an interim double top and how it formed a secondary double top, and that I believed should we penetrate below that neckline, we would get a burst of prices lower. Now, this was where the market was trading before the market opened for the next week's trading, where I recommended shorting the Euro versus the Japanese Yen at 124.57 on the premise that it would rally before it fell. And you can see that that's exactly what it did. In the Sunday following the release of my email, the Japanese Euro versus Japanese Yen went higher, triggered our order at 124.57, and we recently got out at or near current trading levels around 122.81 and generated almost $50,000 in trading profits. This is an email that went out to thousands of Pattern Trader members on April 21st, 2019, in which it was entitled US Dollar Japanese Yen Narrow Range. In this particular example, I showed how the descending wedge triangle and the double top was likely to lead to a reverse in this trading pair. And at the time, I recommended selling short at 112.61. I said, based on the weekly charts, I believe dollar yen is in a long-term trajectory lower. I believe last week's very narrow range day bar, narrow range week bar could be the catalyst for a price move lower. This is the extract of the trade in which I sold the dollar versus the Japanese yen at a price of 111.61. Now, the email went out on April 21st, but this trade wasn't triggered until 4 days later. And this is the value of the pending or resting order. Right when the market was about ready to reverse, the sell stop was triggered at 111.61, and I am still in this trade 2 months later. Right now the market's trading at 108.55. I got in at 111.61. I'm making 306 pips on this trade, and I'm still in this trade several months later, in which I'm making over $143,000 on the trade, including $19,000 in swap fees. This is a live chart of the US dollar versus the Japanese yen on a weekly chart. All the way back in 2015, this double top reversal chart pattern alerted me to a change in direction from a market that had been going higher leading into that reversal pattern to one that went lower after the reversal pattern was formed. This is the reversal pattern that is still dictating the market action even several years later after that double top was formed. In the more recent time, you can see that the dollar versus Japanese yen on a weekly chart has formed a long-term descending triangle, denoted by this sloping downtrend line that connects all of these highs. As you can see, each time this rallies, the highs are sequentially lower than the last. Now, more recently, dollar versus yen double topped right near this downtrend line. And you can see it was at this juncture on April 21st when it formed this narrow range bar that I anticipated a change in direction lower in the dollar versus Japanese yen. Now, what I mean by a narrow range, you can see that the size of this weekly range, this itty bitty little bar from high to low, that was the entire trading range for 1 week. And to my mind, those little bars look benign, they look innocent, but they often precede a massive turn in direction. So on April 21st, I recommended to our members to sell short the Japanese yen at a price level of 111.61, and you can see that it's presently trading in the market 306 pips lower. Now, I see no reason to get out, so even though I've been in this trade for almost 2 months, I see no reason to get out, as I ultimately believe that dollar yen will drop and retest the lower level of this descending wedge triangle at or near the 104 price level, and then probably go much lower after that based on the patterns that are developing in the market. I hope you got a ton of value out of this video and that you can begin to appreciate the value of analyzing any trading instrument on a long-term trading chart to capitalize on the big moves in the market. I wish you a healthy and prosperous trading week, and I'll see you next time.